Good morning, everyone. Thank you very much for joining me today in this webinar for new builds on plan, taking some time out of your most likely busy days. The weather's quite nice as well, so it's nice that you guys are taking the time to be here. Before we get started, good for you guys to know is that today's session will be recorded and shared. So if you miss anything or you have to leave earlier, no worries, you'll receive everything most likely tomorrow, and you'll be able to rewatch it as many times as you like. Well, first of all, I'd like to introduce myself. My name is Ludo. I work as an expat buying manager in the Amsterdam region. I'm born and raised in the Netherlands. I've lived in the USA for 3 years when I was younger as an expat child, actually. I'm a proud father of 2 cats. Who knows what the future will bring, but for now it's 2 cats. I actually live myself in a new build in the north of Amsterdam. And I am not here by myself today, actually. I am joined by a good partner of us, Andrew. Andrew, would you like to introduce yourself?
Sure, thank you, Ludo. Glad that I could join today. So my name is Andrew Aziz. I'm working at the Viisi Mortgages. So we can help you to arrange the mortgage, whether you buy new construction or not. Viisi is quite a large company. We have roughly 60 employees. Which is very nice. Keep on growing. We were a great place to work, #1 in the Netherlands, so which is also very nice to mention here. I bought a property a year ago. Was quite a challenge as well. Got married, bought a property. I actually got married on the 23rd of August. Got the keys of my property on the 25th, and then flew onto my honeymoon. So quite a hectic period that I've seen. And happy to answer all mortgage questions that you might have.
Perfect. Well, thank you very much, Andrew. Always nice to have you here.
Thank you.
We'll be talking about a few things today. First of all, introduction about the EHN team and the Viisi team. Some pros and cons of owning a new build property and actually going into the process of a new build property. Some market information, always good to know. The pricing and costs, obviously important, the actual buying process, and then we're going to talk about the 5% rule and guarantee and listings and financial topics and mortgage info. Let's get started. First of all, we think greatness is achieved in the agency of others. What does that mean? Is that obviously I'm not doing this whole thing by myself. I have lovely colleagues from all around the world. We have Alana from Ireland, Kimo, who's actually from the Netherlands, but yeah, all his ancestors are from the Caribbean. Rafaela, who has joined us today as well. She's from Brazil. Good to mention, by the way, is that if you guys have any questions during the webinar, feel free to pop them in the Q&A. Rafaela is here to answer them while we go on. Yeah, don't hesitate to do that. And then some colleagues from Cyprus, Belgium, all over the place. Cool. Well, we're obviously here because you might be looking for a new build. Let's talk about some pros and cons. First of all, some pros. When you're buying a new build property, you are so-called co-developing with a developer to actually develop the property. That means that they will, of course, initially come with initial drawings, but you're actually able to adjust the drawings and the property completely to your own taste. And of course, you know, add the kitchen that you want, add the bathroom that you want, and potentially add other features that might fit your taste. Well, nowadays the energy label will be very good. There are quite some strict rules regarding energy labels now with new builds, meaning that you'll most likely, when buying a new build, now have energy A label plus. So insulation is going to be great for in the winter, but also for in the summer to keep the heat out. Maintenance is going to be limited as everything is new. Everything should be working perfectly, meaning that for the coming years, maintenance will be rather low. This is a very big one, the no transfer tax. When buying a new build, we'll touch base on this a little bit later on, but you don't have to pay transfer tax, which is normally 2% of the purchase price. So that can save you quite a big sum of money when moving forward with a new build. There's no appraisal needed because it's very difficult to find a comparable property. The bank will actually see the purchase price as the market value. So an appraisal is not needed. Will save you another 500 euros or so. There aren't only pros. It kind of looks like it, but there aren't only pros when buying a new build. There are some cons as well. First of all, it's not possible to view your property. Would seem rather obvious, but it is definitely a thing that you should keep in mind, is that you're buying something that doesn't exist yet, meaning that you can't have a proper view before you actually purchase the home. You have to subscribe to different channels to actually be able to buy the property. It's not like you can find a project on Funda and immediately just sign up for it and that's it. It's a little bit more competitive, and therefore you have to subscribe to multiple channels to be on a potential waiting list or things like that. When you buy it, you aren't able to move in within the first couple of months. You actually have to wait before the whole construction is built, meaning that delivery time is between 1 to 2 years. Yeah, this is, I think, in the current market seen as a pro, actually, but in the market, let's say 8 years ago, it was definitely a con. It's not really possible to negotiate on price. The asking price that you see is the price that you're paying. Current market, it's nice because with existing builds, overbidding is going on a lot. And with new builds, that's not the case. However, in the past, it used to be the case that there was an asking price and you were actually able to negotiate on the asking price and potentially take it down a bit. That is also not possible with a new build. So what you see is what you get when it comes to purchase price. Then the costs are well, pretty much double than with the existing houses. And that is just that because the building costs are quite expensive nowadays. So yeah, good to keep it in mind. Then some market information. I think we should talk numbers on this case. So if we look at last quarter, the offer on the market is very, very low. Currently, it's at 8,250 houses. This is 22% less than last year, which is quite insane. Because of this, the average house price is rising. Compared to last year, risen with 14%, which is again for a yearly rise very, very high. The properties are moving very quickly, right? So I would say 50% of the apartments are sold within 30 days, and houses even quicker. 75% of the houses are sold within a month. So yeah, you need to keep an eye on all the different channels every day before or without having the risk of actually losing a home. So good to keep in mind. When we look at this graph, we see that compared to the houses of 2015, prices have risen quite dramatically within just a 5-7 year span. There was an indexation of 170.7. So even though that is the case, we still think it's a good investment, but good to keep in mind that at some point it will stabilize a little bit. And then a new build 9 out of 10 times is a little bit more of a smarter investment, just because you are buying a brand new apartment instead of an apartment that might fall down and need much renovation. Well, I just said that the prices are increasing. It might be good to know why that is actually the case, what the market drivers are currently. A few factors. I would say currently there are a lot of fiscal benefits in place. For example, the transfer tax exemption. Well, this is the case actually with existing builds. If you are buying a property that is bought under 400K, it's your first home in the Netherlands, and you are actually under 35 years old, then you are exempt from paying transfer tax, which is the 2% that you would be paying over the transfer. So that makes it obviously attractive to buy. There's still an interest rebate, meaning that your monthly cost will be well, a little bit cheaper actually than initially thought. When selling a home, there are no capital gains. So if you make a nice profit on your property plus the repayment that you've made in the last couple of years, you're not paying any taxes over that. Even though the interest rates have been rising the last couple of months, we're still at a very, very low interest rate, right? We were at around 1.5%, but now at 3%, a little bit over that. Correct me if I'm wrong, Andrew. But this is still a very, very low interest rate, right? So money isn't free, but it is definitely cheap currently. This is an important one as well. Rents are high, and as long as the rents keep rising, it's going to be more and more attractive to actually buy a property. And I think this is one of the biggest market drivers currently, and that is the fact that the supply is still very, very low. So as long as the demand is much higher than the offer, prices will keep rising. I think that's a fairly general topic for sales in that sense. For new builds, this is also a big one, and that is that the cost of materials are going up. Due to the whole COVID crisis and all that, it's been much more difficult to actually find good materials, and because of that, the prices have gone up. And you see this actually in purchase prices of new builds as well. Then prices and costs, things to keep in mind. When buying an existing build, you are actually buying the property, but also have to pay another 2 to 3% of the purchase price on top of it for closing fees. Well, when buying in a new build, the costs are a little bit lower. You're actually buying in a free by name or otherwise all-in price. That is not totally true in my opinion, because you do have to pay some other costs, but they are definitely much lower than existing build. So for example, a notary fee of the transfer deed is already included, purchase contract and notary, the transfer deeds included. If you need a mortgage, then you do need to pay extra for a mortgage deed, but this is a couple of €100, not too crazy. The registration in the land registry is already included, and this is a big one. The last one is the VAT on the purchase price. So instead of paying transfer tax, you're paying VAT, but this is already included in the purchase price, which is a rather large sum. And this is also for the land that you're building on. I do want to have it mentioned that if you're buying into a new build, you see a asking price, that's the price you're paying. However, it's very important to look and to consult with, for example, a buying manager, or at least someone who has experience in this, to see if the property includes everything that you want it to include. For example, hot water in the kitchen. So, might sound crazy, but I've had projects where you need to pay extra for hot water in the kitchen. The kitchen itself might not be included. The bathroom itself, the tiling might not be included. Flooring is 9 out of 10 times not included. So you're paying a base price for a rather base apartment. Everything that you want different or that you want added will of course cost extra money. So good to keep in mind that you're going to be spending more than the asking price for your apartment, unless you are going to live in the apartment without a kitchen and floor. Then an overall overview of costs that you need to keep in mind. Well, a transfer tax, in this case, 0%. VAT is already included. Registration in the land registry or in the cadastre is also included. If you need a mortgage, like I mentioned, you will need to have a mortgage deed, typically between 600 and 1,100 euros. Transfer deed and purchase agreement is already included. If you are going to be working with a bank or with an independent advisor, costs will differ between 1,500 and 3,400 euros. When working with a typical real estate agent, another 1 to 2% of the purchase price is added on top. Good to keep in mind is that Expat Housing Network actually charges a fixed fee. We'll talk a little bit about our fees later on, but it's definitely lower than 1 to 2% of the purchase price. Appraiser, not needed. Technical inspector is something we definitely advise you to have. There are 2 different technical inspections done, I would say, for a new build property. First of all, is just to check the technical description. This is a very long document stating everything about the technical state of the home, where the electrical faucets or electrical points are going to be, where the faucets are going to be, if there's hot water, everything you need to know about the actual design and state of the home. It's nice to have a technical expert look at that as well, to make sure and double check that everything's in the home like you expect it to be. And then after delivery, it's also nice to have, again, a technical inspector come in to do a double check and make sure everything works like it should. and it works like it is mentioned in the technical description. Both of them together is around 350 euros. If you do not speak the Dutch language fully, then you are obligated to have an interpreter be present at the notary. When signing the purchase agreement, that's not needed. So then you have another 1 to 2 years during construction to master the Dutch language. But I can imagine that's a little bit more difficult than said. So it's also easy just to get an interpreter in place, and he or she will translate all the documents that you will be signing at the transfer. Bank guarantee. You can either go for a deposit or a bank guarantee. Deposit is 10%. Bank guarantee is either 250 euros or 1% of the guaranteed amount. And then last but not least, we have the NHG. This is a institution that gives out lower interest rates and protects you as like insurance if something were to happen where you are unable to repay your mortgage to the bank. I do have to correct this. It's not 0.7%, but it's actually 0.6% of the mortgage amount that you pay as a one-time fee to enter into this construction. On the right side, we have another column, tax deductible question mark. Well, funny thing is everything that is related to a mortgage is actually tax deductible. So we're talking mortgage deed, potential appraisal, bank or mortgage broker fees, and the NHG as well. Unfortunately, any advisory costs when it comes to a buying agent, those are not tax deductible as of now, but I hope that in the future that will change a bit. Cool. Then, well, we just talked about what kind of costs you're going to be making, but let's see when you're going to be making those costs. I would say you have two terms that are important to note, and that is, well, the ones mentioned here. First of all, you have the purchase price and costs. These are for the land and the costs that you're making for the notary and those kinds of things. These kinds of costs are going to be made at the signing of the transfer deed. This is prior to the building of the property. This is done at the notary prior to the building of the property. The second payment is going to happen in the building depot, and this comes from your mortgage. So how this works is that the mortgage provider will actually create a extra little savings account for you that is dedicated to the building of your apartment. And every time a phase of your apartment is finished, the contractor or builder will send the invoice to your bank, and the bank will pay that invoice partially with, of course, your ratio of the ownership of the building via that little savings account that you have at the bank, the so-called building depot. These terms are defined in the purchase agreement, so you'll know them beforehand. And like I said, if 10% of the building is done, you'll be paying 10% of the building fees as well, and therefore also 10% of your monthly payments. This would mean that at the end of the building, when it's, for example, 90% finished, that you are already paying 90% of your monthly installments to the contractor, or for you guys, in this case, to the bank. And that means that you have simultaneously probably your rent and actually your monthly payments already. So good to keep in mind that your monthly costs will go up when getting closer to the finishing of your apartment. The process is a little bit different than buying an existing build. Let's just go through all the steps in total. I think that works easiest. So I think you can see my cursor. On the left, we have the search and subscription. With existing builds, this would mean search and viewings, but of course we're unable to view properties. So this means we're going to be searching for properties and subscribing to all the channels that might be relevant when finding a new build property. We'll talk a little bit later about what these channels can look like, but to tell already a little bit, of course, Funda, but also municipal websites and websites of builders. When we find a property that is available and meets our requirements, we let the seller or selling agent in this case know. We'll be invited for a meeting with the seller or the developer or selling agent, either online or at their office. That is right here. This is a moment where we can ask all of our questions that we want answers to, but this is also a moment where the selling agent is, of course, going to, well, sell the project and explain exactly the timelines, what kind of project it is, if it's co-development or just development by the developer, if the homeowners association is going to be a very active one, something that you'll set up together with the other homeowners. Well, all these details that will have impact on the decision for you to move forward or not. We'll also get a bunch of documents that are relevant for the project as well. One of them, like mentioned before, the technical description. We'll go through everything. We as a buying agent will make sure that there are no red flags. Everything is as it should be. The technical inspector here comes into play to make sure the technical description is as it should be, and also to inform you, well, again, exactly what you're buying. If we want, we can have another meeting with the selling agent or developer just to have well, potential additional questions answered. And sometimes it's also nice to go to their office and to actually sign the letter of intent immediately there, assuming that we want to move forward. Well, if we do want to move forward, we eventually let the selling agent know and the developer know, of course. They will draft up a purchase agreement together with the notary. 2 documents in this case, actually, purchase agreement and building contract. Purchase agreement is together with the developer, and building contract is together with the actual builder, giving them the green light to actually build the property. This is also the moment that you can start applying for a mortgage. You have a cooling off period here. Cooling off period typically in an existing built property is 3 days after signing the purchase agreement. When buying a new build, you have a little bit longer the time. You have 1 calendar week to potentially pull out without giving any reason and also without having any consequences. So that's a little bit more time there. But like I said, this is also the moment where you actually apply for the mortgage. So together with Andrew, you will press the big green mortgage button to apply for the mortgage. Typically takes around 4 weeks to get everything in place. Then here we have the mortgage approval. Well, this is always nice. This means that not only you think you can pay the monthly installments, but the bank agrees with you. And that's always nice. We have to wait around, I would say, 2 months up until this moment to have actually around 80% of the project sold and 80% of the mortgages approved. In this case, I'm talking about other buyers. That 80% is needed before the constructor will actually start building the property. So that is where the hooray letter comes in. If all is okay, all requirements are met, we'll get their hooray letter, and that is the moment they will start laying the first bricks and the first foundations and things like that. This is also the moment that we sign the transfer deed. So this is where the initial purchase costs come into play when they're paid. And this is actually also the moment that you are officially owner of the project. Even though the project hasn't been built yet, you are already owner of that apartment. So what you saw a couple of years ago, or I would say 10 years ago, what happened a lot is that investors actually go through this whole process. They become owner, and then it takes around 1 to 2 years. So let's say they pay 400,000 euros here, then it takes around, if you hear my cat in the background, by the way, I apologize. But what happened is that they wait for around two years for the property to be finished. And then after 2 years, the value went up dramatically, and they would sell it already without having lived in it themselves. Unfortunately, most municipalities now came with a rule that that is not allowed anymore, and you have to live in the property for an X amount of years before you can actually either rent it out or sell it. But yeah, you become the owner, building depot comes into play, and first payments are going to be made, first installments are going to be made towards the bank, and well, the building works here. This is a moment or a typical time period of, I would say, 1 year to 1.5 years. During that time period, you will have moments where the developer actually invites you to come over, come to the building site to check it out. You'll have meetings with the developer regarding small adjustments in your apartment, but you will also start having meetings with the homeowners association to make some decision on common areas. If you want to have solar panels on the roof, if you want to have electrical sockets in the parking garage for your electrical car, things like that. So you will already be involved in the process while the constructor is working on the building itself. Then right before the delivery, we'll again have our technical inspector come into the property to make sure that everything is as mentioned in the technical description, or as is how we agreed upon during the process of the building. But this also means just that all the electricals work, warm water comes out of the faucet when we want it to, that the water pressure is as expected, things like that. Then we'll go through the property again with the developer as well, just as a formality to make again sure everything is as expected. Delivery happens, you get the keys of the home. I would say that is the biggest hooray moment, and definitely time to open a bottle of champagne, because that means the next day you are able to move into the home and make it your home. That also means finishing here. Then you have another time period of a guarantee. I think we'll touch base after this, but this is a moment that you can still go back to the developer saying, hey, things are not working as expected, or things popped up during this time period. Please fix this, because we are still in the guarantee period. Yeah, so the 5% rule and how that correlates with the guarantee. So the 5% rule, it's a legal right of the buyer, something that you can always do when buying a new build property, something we always advise you do. How that works is during the process, you'll be paying a deposit or a bank guarantee if you don't have the cash laying around. And the deposit is 10%. This is generally paid actually, or it's seen as the last, even though it's made as a deposit, it's seen as the last payment that you're going to be making towards the developer and constructor. Now, we always advise you to split that in two. 5% will obviously go to the builder, but you can actually take the other 5% and put it in a depot of the notary. The reason why you would do that is so that, yeah, the same goes with the bank guarantee. Why you would do that is if there are any defaults after the delivery, some things that are hidden, or things that didn't pop up during the final inspection, you can actually demand the developer and constructor to fix those defaults and hold on to that 5% to give them an incentive to move forward with those fixings of the defaults. So it's I would say use it as a insurance for yourself, but also an incentive for the constructor to make sure everything works as it should. Same goes actually for common areas when buying into an apartment building. Then if there are any defects after delivery, we advise you don't free up the amount equal to the defect, but keep the total amount in the notary's account, just because they might say, okay, screw that 1%. It's going to take too much work to actually do that. So we'll lose the 1% and then deliver a home that isn't up to expectations. It's better just to keep the total 5% in place there. Besides that, the interest rate of non-payments are too high as well. The guarantee, you have a contractual guarantee which is always in place when buying a new build property. This is the 3% after delivery, so equal to the 5% rule, I would say. Then besides that, you have another 6 months for maintenance. Things that break within 6 months, that shouldn't break within 6 months, will be maintained by the constructor as well. Then you have an additional 5 years for potential hidden defects. So if something pops up in the balcony or in the walls, or anything that shouldn't be there, you have a total time of 5 years to actually raise flags and have the developer constructor come in to fix that. And it goes a long way, but even up to 20 years, you can go back to the constructor and have them fix major defects. Of course, these are things that doesn't happen a lot. This would mean that parts of the building are actually breaking off, and you definitely need to have a full report for the constructor to fix defects after, for example, 19 years. But in some cases, they are still liable. Now, it's also possible to get some extra coverage on your guarantee. When buying a new build that is connected to the institutions Woningborg, SWK, or Bouwgarant, you get some additional guarantee or additional coverage. For example, 3 months after delivery, you still get an additional 6 years of a guarantee. Specific parts are well, guaranteed for a shorter period, but you have specific parts of the property that are normally not guaranteed within your standard contractual guarantee. But you have to look into your specific purchase agreement to see what is specifically guaranteed there. And you have an additional 10 years for major defects. So besides your 20, you have another 10 years on top of that. So well, hopefully it's not needed, but it's nice to have as additional insurance there. Cool. Well, I think this is an important one as well. We've talked a lot about how the process looks like and what you potentially could be buying, but let's talk about where you can actually find these listings. Well, from top to bottom, of course, these conditions differ per project, but a big website that you have for in the Netherlands is nieuwbouw-nederland.nl. This is a general website where you can find all the new build properties of the whole of Netherlands. We say city websites as well because the majority of the municipalities, at least the bigger municipalities in the Netherlands, they have a specific dedicated page for their new build properties as well. Even though they're not built by the municipality of course wants to make sure that everything can or everyone can buy a home. So they're also pushing these projects to the people. Then besides that, and this is something that correlates with the final point as well, keeping an eye on all the project websites. Of course, a buying manager is going to do this as well, but there are bigger investors that work with, again, smaller investors that have a lot of these projects on their websites. So just subscribe to their newsletter so that you can stay ahead of the Funda market, for example, and keep an eye out for projects that might fit your requirements. Then the third one, it's an obvious one, Funda.nl. It's the biggest listings website of the Netherlands. Majority of the properties on there are existing builds, but you also see quite a lot of new builds on there. You really have to be quick with these ones on Funda, because the majority of the projects will have been listed on their own websites for a month or two before. Before they're actually listed on Funda. So it might be that 75% is already gone. So if you want to make a shot, definitely have a look on Funda every morning with your cup of coffee. Otherwise, you're just gonna miss out. And then the last one, definitely a big one. We as a buying manager, but also other real estate agents, we definitely get projects sent to us prior to them hitting the market. So it definitely has an added value to use the network of your buying manager there. We'll be able to share projects with you. We'll know what kind of requirements you have and get you to that meeting with the developer quicker than you might be able to do so by yourself. All right, Andrew, you're up. Financial topics and mortgage info.
Thank you very much, Ludo. As Ludo has already explained some things about new construction, I think it's also important to compare it with existing houses. Let's start on the left. Well, with existing houses, you have certain purchase costs that you have to keep in mind that are not applicable with new construction. As Ludo was saying already, the transfer tax is not applicable with new construction, but that will be applicable if you buy something above the 400K. If you buy an existing house. So that's quite an influence on your savings, of course. With an existing house, normally you can have the market value determined by an appraisal report. So actually an appraiser needs to go to the property to determine that market value. Normally what we see 9 out of 10 times, it's roughly the same as the purchase price. And with new construction, it works actually a bit easier. There's a market value, which is the purchase price for the ground, for the property itself, and any additional work is also seen as pure value for the property. Let's have a look at the next slide to make a comparison, to have a look together. What you will see on the next slide, if we look on the left, thank you. If we look at the existing construction on the left, let's say you buy something for 450. Well, that means that there is a transfer tax applicable of 2%, which is 9,000 euro. There are notary costs because you have to sign two deeds, the mortgage deed and the property deed, and maybe some translator costs as well. An appraisal report normally costs around 800 euros nowadays. Well, you have our fee there, which increased a little bit as of June. And of course, the fee for Expat Housing Network. Well, as you can see, if you add all of that cost, if you add all of these costs up, you'll be looking at a total cost of roughly 467,000. But you can only borrow 100% of the market value of the property. So as you can see on the left-hand side, if you buy it for 450, the appraiser says it's also worth 450, and then that's what you can borrow at max, meaning that the difference between the 467 and 450 you have to put in on your own, which is the 17,000 euro own capital that's required. If we look on the right-hand side, new builds, well, again, the purchase price 450, there's no transfer tax. The notary cost will be lower because you don't need a property deed, which is already included. Most of the time, there's no appraisal report needed. There are some mortgage providers that require this if there is leasehold on the property. Again, you see the fees for Expat Housing Network and Viisi. As you can see here, the total cost would be 450, let's say 7. Your maximum borrowing capacity is based on the value, which is 450 in this easy example, meaning that your own capital is roughly 10,000 euro lower than with existing construction. So if we purely look at the well, front up cost, let's say, new build is indeed more interesting. However, there are a few things that we need to keep in mind. The market value, as I said, is normally determined by the cost for the ground, for the construction, and any additional work that needs to be done. There needs to be a form filled in, which is called the home improvement specification form. And on that form, you have to fill in what you need to do of any additional work. So as Ludo said, for example, 9 out of 10 times there are no floors in it. It might be there's quite a basic kitchen or a basic bathroom that you would like to upgrade that. All of that needs to be filled in on that form. So always be aware if you look at a purchase price and you see, for example, 600K, you have to know for certain that there will be some additional costs. Floors that need to put in, maybe some painting. Sometimes we've seen projects, and I think Ludo as well, that don't even include a bathroom. So you have to add that on top of that as well. So always be sure to double check with the selling agency, okay, what's already included and what is included. Is that quite basic already at the level that you would like it to be? Because normally what we see when we do mortgage applications is that roughly we need another 5 to 10% on top of the purchase price. The upside is that any additional work that you'd like to do is seen as 100% of added value. So if you buy something for 500K and the additional work is 50K, then the market value will be 550. You don't have to prove that with anything. But always make sure to double check that with the selling agency. As I said, there's an advantage of having new construction, so the purchase costs aren't that high. But what you do have to keep in mind is that there will be double housing costs, because I think that was also one of the questions in the chat. You already start paying for your mortgage as soon as the construction starts. This will not be at the full monthly payment that you will have once you receive the keys to the property. But it is, of course, something to keep in mind, because that means that, well, normally construction can take 1 to 2 years, meaning that you have to pay your own rent or your current mortgage, plus, of course, any new payments that you'll have. And normally what you will see is that at first, when you'll be at the notary, there will be a price paid for the ground, meaning on that part, the monthly payment already starts. And the remaining amount for the construction is put in something called the construction deposit, bouwdepot in Dutch, which means that there will be money in that construction deposit while the property or the project will be built. And every time a new phase is reached during the construction, so normally the construction phase is split in, let's say, 10 to 15 phases. Every time a new phase is hit, there will be money extracted out of that deposit, meaning that you will not be receiving any interest on that part. So your monthly payment, you will see that consistently it will increase. So it will start, let's say, roughly at half of your regular monthly payment. And then with every new phase that is hit during construction, you will see that your monthly payment will increase up to, of course, well, 100% after you receive the keys to the property. I sometimes get the question, okay, Andrew, can you tell me a bit more about the double housing costs and how much will it be exactly? We just don't know, because we don't know which phase when will exactly start. Might be some delays, might be that they can start early with certain phases, for example. So that's why we always say try to assume that you will be paying 80% of the regular monthly payments of the new construction besides from your current costs. So 80% of the new monthly payment plus your own monthly payments that you have now, whether that's rent or your current mortgage. So keep in mind that you need to have enough savings to bridge that gap as well, or save significantly less during that period. And that construction deposit is normally valid for quite a long period. So normally that's long enough to bridge the period of the construction itself. There are a few important things to keep in mind. It could be that you already have a project which already started with the construction. And then it might be that there is already construction interest applicable. So that means that the constructor already started paying things in advance, meaning that there's a certain construction interest that you need to pay at the notary, which you should be capable to put in out of your own savings, or we can also have a look to include that in the mortgage. An important date that Ludo already mentioned is that you have a legal cooling off period of 1 calendar week. Another important date that we, of course, as your mortgage advisor also look at is the financial clause. From the moment that you sign the purchase agreement, you normally have 2 months to have the mortgage arranged. Normally that can be arranged already in a few weeks. So I haven't had a situation where it took more than 6 weeks, to be honest. So I think 2 months is more than enough. Normally we'd like to schedule our mortgage appointment together, let's say right after you sign the purchase agreement, so we can already start working within those 2 months. Another important thing that we need to keep in mind are the suspensive conditions. In the purchase agreement, you normally see these suspensive conditions, and that could be conditions such as, well, there needs to be an environmental permit attained by the municipality, or there needs to be 70% of the properties have to be already sold before they start the construction of the property. And these suspensive conditions are normally 6 to 9 months, but that could also mean that it can take 6 to 9 months before you'll be at the notary. So that's very, very important for us to keep in mind, that we choose a mortgage provider where the offer validity is long enough to bridge that period. So normally what happens, let's say you have suspensive conditions of 6 months. Well, let's say after 5 months, you get the news that well, the suspensive conditions have been met. So that's called the hooray letter, as Ludo said, hip, hip, hooray. The suspensive conditions have been met. We have sold at least 70%. The environmental permit has been attained. We will start construction in 6 weeks, meaning that you also need to be at the notary within those 6 weeks. So that means that the offer of the mortgage provider also needs to be long enough to bridge that period. There are mortgage providers that have specific conditions or longer offerabilities for new construction in comparison to existing construction. So that's also something that we'll have a look at together. Of course, you can always make your own estimations online on how much you could borrow. But looking at the rising interest rates, I would strongly advise you to plan in a telephonic appointment with one of our mortgage advisors. I'll be sharing a link also. It's a free call in which we can have accurate calculations. Interest rates have been more than doubling in the last 6 months, and have been increasing already by 0.5% in 1 week. So I think it might be that you make your own calculation. Next week, your maximum borrowing capacity is already different. So always make sure to have an accurate calculation made by one of our advisors.
Perfect. Thanks very much, Andrew.
Sure.
All right. Some final tips. Always good to give them to give you some extra push in the current housing market. First of all, check on the double costs. Like I mentioned at the beginning of this webinar, the asking price is what you're paying for the project, but the project is maybe not exactly what you expect it to be, as you might want to add some extra work or things like that. Timing is also very important. If you are planning to move out of your current rental apartment within a year, but the project might only be finished in 1.5 years or 2 years, things are good or those are things that are good to keep in mind. And definitely also check them with Andrew or with your mortgage advisor. As he mentioned, some mortgages, their offer is only valid for a half year, and if you are only able to meet the notary in 9 months, that can be a problem, and your offer is not valid anymore. Definitely consider the technical review of the documents. It is something that is not obligated, but is something that we definitely advise. It's between 50 and 200 or 300 euros. It might be a lot of money now, but when you are living in your home and something is not working like you wanted to, or you forgot that you wanted hot water in the kitchen, it's going to be a lot more expensive to actually get it there after construction than before construction. So don't save up in the beginning of the process. Check if you have the guarantee from a additional a project like the SKW Woningborg or Bouwgarant. Like mentioned above, calculate the extra works because this is going to be on top of the asking price. However, as Andrew mentioned already, all the extra works that you add to the project will be included in the mortgage as well. So that is something nice and something that doesn't have to come out of own pocket. And then this correlates with the second point, consider a technical expert for the delivery as well. When you've been working on a process for maybe 2.5 years already, it's nice that when you move in, you can just put your legs up on the couch and relax instead of having to worry about all these different things that aren't working as expected or as mentioned in the technical description. Cool. Well, I saw this question pop up a few times already. What are the fees? We'll start with our fees, Expat Housing Network fees. We have a specific a package that is for buying a new build. How this works is, of course, you'll have a personal intake and access to a buying consultant. We'll be searching projects together with you. So it's something we require or we expect from you as well, but we'll, of course, also be actively searching for projects. We'll be joining you to the meetings with the selling agents and with the developers. We'll review all the documents that come out of it, make sure that you have a checklist of all the points of attention. We'll do a price benchmark. This is, in other words, a price research to make sure that the price that the builder is asking is actually in line with the current market values. If possible, we'll do some offer negotiation, but yeah, in the current market, probably not really going to happen. Very important, we'll review the contract. All documents that you'll be signing are going to be in Dutch, so it's very important that you know what you're signing. Andrew will, of course, do this when it comes to mortgage-related documents. I will do this with all the purchase-related documents. Then between the transfer and actually the delivery, of course, will be there for the whole support and answering any questions that there are. And we'll be there to assist any booking of the experts, talking specific notaries, but also financial advice or technical inspectors. Comes to a total of 2,999 euros. This is including VAT. This is what you're paying, no hidden fees whatsoever. The deposit is 299. This is, of course, included already in the full price. This is something that you pay upfront, and the rest is only due at the moment that we get you to the notary to sign the transfer deed. That's it. How about you, Andrew?
Thank you, Ludo. So our fee starts, we have a fixed fee for the whole process. So if you're a first-time buyer, that's 2,000, let's say 600 euros. Keep in mind that that's also tax deductible. So you get roughly €1,000 back from the tax authority. We're completely independent, so we can choose out of more than 30 mortgage providers, and we don't really care for which one you choose, as long as we choose something that suits you the best. And that fixed fee also includes applying for any insurances. Especially if you're buying together, it might be also wise to have a look at a life insurance or disability insurance. All of that is also included in our fee. And which is something else that I'd like to mention is our in-house acceptation team. So we have an internal department called Smooth Operations. And these are actually colleagues of mine that are already checking all the documents before we send it through to the mortgage provider. And that actually means that we have quick processing times if we look at arranging the mortgage. And there are also a lot of mortgage providers that are now providing us priority lanes, meaning that they take our applications well as a priority and review that earlier than any of our competitors, because we work that efficient within Viisi. So, well, make sure to plan in the call so we can help you to get the property of your wishes.
Perfect. Cool. Well, I think we are now touching base with one of the important things as well, and that is actually answering the questions of the attendees. Rafaela, would you like to help us out with this one?
Hello. So I think most of the questions were answered during the webinar, but there are still a few left. So the first one is how much tax benefit can you get from newly built properties? I heard 30%. Is that correct?
I'm going to pass this one to you, Andrew.
Yeah. So keep in mind that your main tax benefit is that you don't pay any property tax if you buy a newly built property. What you do have to keep in mind is that the interest that you pay on your mortgage is tax deductible, but that's also the case if you buy existing houses. So that's actually the same. And I think the percentage that you probably mean is the interest deductibility, which is around 37% that you get on a monthly or a yearly base, which is actually the interest that you pay, which can be deducted from your taxable income.
Perfect. Thank you, Andrew. There is another question from Rodrigo. What's your, I think this one is for you, Ludo. What's your actual experience with current delays in the build phase?
That's a good question, a question I get asked a lot nowadays. There are two things that I would say are going on. It's we're still feeling the after effects of the whole COVID situation. Because of this, materials got more expensive, but it also became more difficult to actually get materials. So buildings that were supposed to be built with a lot of wood are now being changed to be built with more concrete or bricks and things like that. Because of those situations, delays are happening. Luckily, in the purchase agreement, there are certain terms or periods defined for how long a building can take. However, these are quite long, much longer than you want them to be. Now, also with the interest rates going up, we see that a lot of people that were actually chosen or had already agreed on moving forward with a project are all of a sudden not able to afford it anymore because of the rising interest rate, and therefore their mortgage cap went down. Because of this, it takes a little bit longer to actually send out their hooray letter because they still have to meet the 70%. 70% of the projects need to be purchased. So because of this, delays are happening, but yeah, generally speaking, these delays are never more than 3 to 4 months, which sounds very long, but in a whole process of 2 years, 3 to 4 months is definitely overseeable.
Thank you, Ludo. I have one question from Liana. If a new build project is financed partially by mortgage and partially by own savings, do the own savings go to the building deposit as well? If not, at what time are they used?
Yeah, that really depends, Liana, on the exact amount that you're willing to put in. So that's always something that we can have a look at. The more you put in, the lower your loan to value becomes. So the mortgage in comparison to the actual market value of the property, the lower your interest rate becomes. So we can always have a look to see what's a good input to put in, to see at the exact own input and what in total will be put in the construction deposit.
Thank you, Andrew. I think there is another one for you. Can you tell more about a bridging mortgage and how it works?
Yeah, sure. A bridge loan is normally applicable at the moment that you already own a property and then buy the next one. And in that sense, you'd like to take the surplus value of that property with you to the next mortgage, of course. And how that works is that, well, unfortunately, mortgage providers are a bit more conservative with that. Let's say that your current property is worth 400. Then they actually assume that you'll be selling the property for 90% out of that 400. So 360 minus your remaining debt. And that's actually the bridge loan that you can take on for financing the new property. Meaning that you can only, well, take a large part of the surplus value into consideration when buying the next one, but not the full surplus value. And then when you go into the new property, well, you sell your current one, you repay the bridge loan at once. And well, if you've sold it actually for 400K, that means that there is another 40K heading your way, which you then can use to do an extra repayment of the mortgage.
Thank you, Andrew. There is another one for you here. I think that's a very specific one, but maybe you can just give us a general answer. I am unemployed, but my wife is working here, but payroll from abroad. We would like to jointly own a house. Can we apply for mortgage to buy a house, or I need to wait for both of us to have work?
So that could be a possibility. If she's working abroad, it also depends on the mortgage provider. So is it in euros or not? If it's not in euros, we can also have a look, but then you're really limiting yourself in your choice in mortgage providers. So it might, this is quite specific, so it might be wise to plan in a telephonic appointment so we can have a look.
Thank you. There is another one from Maria, also for you, Andrew. Hi guys, can I change the conditions of the mortgage during the construction process? For example, can I bring or remove a partner later on?
Not during the construction process. That's a bit difficult. Then I would say try to really think about whether you'd like to buy then a property with that person. If you think already about removing him or her, let's say. But what can also be done is, let's say, after the property is finished and you start paying the full mortgage, that the other person takes over the mortgage and the property. But then, of course, your income needs to be high enough to bear the whole mortgage.
Thank you. There is another one from Salini for you, Andrew. Can I get also a mortgage when I buy a house for rent?
Yeah, that's called a buy-to-let mortgage. So that could be a possibility, but then you need to have roughly, more than 40 to 45% of the property's value in savings, because you cannot finance it full with a buy-to-let mortgage.
Thank you. Let me see here. Yeah, how much time do we have to sell the current property and pay back the bridging loan?
That's normally around the 12 months, 12 to 18, depending on the mortgage provider.
Thank you. I think we're going to the last two questions. Me and my partner needs to be registered as a partner with Rementa before buying a house together. That's what that one's for you, Ludo.
Yeah, sure. Well, you don't need to be registered at all together to be able to buy a property with the municipality. Technically speaking, you can buy with a friend of yours. You just have to be registered somewhere that they know that you are an actual person buying property, but no need to be registered as a registered partnership or anything like that.
And the last one is also for Andrew. My wife has a permanent contract and I have PhD contract for 4 years. Does this situation limit us to have joint mortgage as my PhD contract is not permanent?
Good question. So we're also specialized in people that do a PhD. There are some mortgage providers that are willing to think along and say, well, we know that a PhD income is quite stable for those 4 years, and afterwards normally you have an increase in salary. So there are some mortgage providers that are willing to think along to see your PhD as a, well, let's say a steady income, even though you will not get a declaration of intent for a permanent one. So there are certain possibilities.
Thank you, Andrew. I think we are running out of time right now, so I think I'm going to do the last question. If the inflation is stabilized in 1 or 2 years, can my interest rate, I believe, my interest rate will decrease?
So let's say your interest rate, you buy a property and then after 2 years, the interest rate is lower. That could be an option to switch from mortgage provider, but keep in mind that you have to pay a penalty if the interest rate is lower, because mortgage providers look at the remaining fixed interest rate period and the difference in interest rate, and that determines what the penalty will be to break up your contract. So it could be a possibility, but then we have to see whether it makes sense to do that, also depending on how long you're planning to live in the property.
Great, thank you, Andrew. Thank you, Ludo. I think we replied most of the questions. I believe if you still have any questions, please give us a call, send us an email, then we can have an intake together.
Exactly. If there are any outstanding, I think there might be even. No, it's not. Never mind. Oh, well, there we go. You can always go to the website for any frequently asked questions, and feel free to book a meeting with either Andrew or with I, so we can answer any questions regarding your specific situation. Thanks very much, everyone, for joining. You'll receive the recording and the slides tomorrow, so you can again watch it as many times as you'd like, and then we hope to speak to you soon.
Thank you all for joining. Bye-bye.